Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Friday, December 16th. Stocks on Wall Street are building on yesterday's modest gains, as investors seem to ignore downgrades of several large banks by Fitch Ratings. More on that in a moment, but first up is a relatively benign report on inflation. Consumer prices were unchanged in November, in line with estimates. Energy costs declined during the month, and that was largely responsible for the results. Excluding the volatile energy and food sectors, the so-called core CPI rose by 0.2%, slightly higher than expected. The year-over-year core rate is one of the Federal Reserve's preferred inflation gauges. Over the past 12 months, it has risen 2.2%, the biggest increase since 2008.
Asset prices are holding steady following the data. The dollar is giving back some of the big gains it achieved against the euro over the past week, and the dollar's relative weakness today is helping commodities make up some recent losses. Right now, gold is back near $1,600 an ounce, after falling about 7.5% just this week, and crude oil continues to trade right around $94 a barrel. In the equity markets, financial stocks may get a lot of attention. Fitch cut the issuer default ratings and viability ratings on Bank of America, Barclays, BNP Paribas, Credit Suisse, Deutsche Bank, and Goldman Sachs. The firm also downgraded just the viability ratings of Morgan Stanley and Societe Generale. But Discover Financial Services is bucking the downward trend, gaining about 1% in early trading. Stifel Financial upgraded the credit card firm to buy, saying it has the best credit and growth trends in the industry.
Another stock to keep your eye on today is a brand new one, Zynga. The social game producer is making its debut on the Nasdaq exchange under the ticker symbol ZNGA. Zynga priced 100 million shares at $10 apiece, at the high end of their expected range. The pricing gives Zynga a total market value of just under $7 billion, above many traditional game publishers and at about the same level as Electronic Arts. Zynga makes games played primarily over Facebook, such as Farmville and Mafia Wars. We also have a big M&A deal to tell you about. United Rentals is buying rival RSC Holdings for a total of $4.2 billion, including $2.3 billion in net debt. The price tag represents a 58% premium over RSC's closing price yesterday, and those shares are jumping 55% on the news. United Rentals is gaining nearly 4%.
Another big winner in early trading is Adobe Systems, up nearly 6%. The software maker actually posted a 35% decline in fiscal fourth quarter earnings, but both its profit and sales figures topped expectations. However, the news is not as good for Research in Motion. The maker of the BlackBerry line of smartphones forecast earnings for the current quarter that would be far short of estimates. The company also said phones based on its new BlackBerry 10 operating system will ship later than expected next year. Shares of Research in Motion are falling more than 12% on the news. And finally, keep an eye on shares of Cablevision Systems. They're tumbling 13% after the company's chief operating officer announced his resignation. That's the latest from Weiss Research. Have a great trading day and a fabulous weekend.